Okay, this is going to be the Insiders video review for Friday, October the 9th, 2015 for Drum Energy Bands. Please read our trading disclaimer. Today, the S&P Futures December contract is struggling actually to go higher, it appears. When we bring in our higher chart, we look at three charts. We feel a trader can trade off of two charts, but a third chart can certainly slow the process down for someone, wanting to be less active. In other words, not being, a scalper that continuously is in and out of the market. So what we're looking at today is we're looking at a chart here of a Renko FloBar. It's a Renko bar. We apply Heikin-Ashi to it. There's nothing really special about the bars other than it allows us to look at momentum without having to look at subgraphs of RSIs, stochastics, Bollinger Bands, BBs, this, that, the other, because we want to maintain our focus on the chart. And with our dots, which are quite special, and the wrap, the solid white midline, we can get a good visual orientation of what the market is going to be doing. Excuse me. So one of the things that we look at is we look at our energy bands, and on this chart you can see that we have a pink overlay of a higher charts energy band and a green charts lower energy band. And the market essentially is staying in between the confines of those energy bands. And if you're just joining us, when our white dotted line, this is our E-mid, when it hooks down, we draw a crest of resistance. And we don't have any shown here, but if we see the E-mid hook up, what we do is we draw a valley of support like that. And it gives the trader something to do while they're trading so that they can, slowly ease their mind into understanding structure. This is energy structure of the market that Charles Drummond created back in the 60s, the mid 60s, when he started to trade with a ticker tape, for God's sake. He's created this software just this year in 2015. And let me just say the code is just beyond that he has created and simplified his life's work in market geometry as well as multiple time frames. Multiple time frames nobody was doing until Charles Drummond created this concept. Now, of course, everybody says, they've created it. Well, if you look back in history, back in the 60s and the 70s, when all technical analysis was just coming into fruition, you'll notice nobody was talking about it. He was. And he's always been talking about the same things. So anyway, enough of that. I want to discuss price popping higher. You can see the tops of our bricks holding inside the upper energy band. It's our first clue that the price is struggling to go higher here. So price pulls back down into what we call our block area, and it's got a white dotted line in here in this lower energy band overlap, the lower yellow, the lower purple. And this is where we would look to engage this strong trend. It's strong because the solid white midline has the blue dots above it, and these blue dots are way up in the upper yellow, right? So we're expecting, some buyers to come in here and drive price higher. But we're also noticing that the upper energy band's holding. We're also understanding that this yellow, this lower yellow, is not driving up into this crest of resistance. So that's very, very important to understand. Of course, as price goes up into this crest of resistance that we have our eye on, in other words, we're just kind of salivating, looking at this 2011 area, price area here, to be getting short in our upper overlap, our upper yellow and upper purple, right? So we're looking at these blue dots, and they're way, way below this solid white midline. So we're expecting this push up here at 2011, 11 and a half, whatever, we're looking for a potential to get short. So let's look at the buy here in the block and this short here, which is what we call the weak dot push. Strong dots, pulls back, weak dots pushing into a crest of resistance. We're going to look to fade that. If you haven't read on the internet, we provide a section and we show some of the setups in the today's video review section of the website. So let's look at these two areas here and here, how we read the crests of resistance and our yellow areas. So let's not forget this price level here. This is about 2004, we'll say. This is our lower, we're over here. This midpoint here, 2005 and a half, right? This is our midline. This is where our block is going to be strong. We're going to be looking at taking a opportunity to get long from. So when we do look at that, what we're going to talk about is we're going to talk about valleys of support. Like for example, this hooks up, we have a valley support. We wait, price comes down, it flushes below the valley of support, it starts to act like resistance, pushes price down. Here we've got another valley of support, right? And this time you'll see price as it's pushing down, you'll see this price level that we're talking about originally, this 2005 and a half level. I'll just draw it in here. 2005 and a half level of our midline. Actually, we'll draw it white. It's starting to show up on the radar screen here. This is our higher chart frames mid, right? And this is a crest of resistance that breaks, of course, but this valley of support, you'll notice this upper yellow here is not pushing down through this valley of support. And when we look at our trade chart on our right, at our 2005 and a half level, you'll notice something taking place here. Why we're just going to pick this green bar to get long as opposed to this one, as opposed to this one, as opposed to this one, as opposed to this one. There's a very, very simple concept that we use, and that's this. You'll notice that here as the valley of support price goes below it and then comes back above it, right? The upper yellow is not pressing down into here. You'll notice as we go below this valley of support, this upper yellow is not pressing down into here. And likewise here, and of course here. So they're all the same. So you might be asking yourself, so what is the significance there? Well, we're coming down into this lower green energy band, and that is starting to show us support. Now, in particular, this one here, as we bounce up, you'll notice that our valley of support is created. We go below it. Now we come above it. Now what's going to take place here is a little bit different. The dots here are staying below the solid white line, and we're getting brick momentum right here. And this is what we call a weak dot push into a valley of support. Our dots all stay above the solid white midline. So on this green brick, we're going to be getting long. And we're also associated with these two midlines here that are not pushing down. This one here pushed down, the lower energy band held. This one pushed down, couldn't even get to the lower energy band, we got the flip. So that's showing us a very, very weak energy pushing down, and we would get long on that trade. So as we go up, we're going up into a crest of resistance, this crest right here at about 2011. And we've already recognized that this upper energy band is holding with this brick momentum. And this push up is going to be weak into a crest. So let's look at the short that we were anticipating as price went up into this 2011. So on our focus chart, I've drawn the 2011 and a quarter, I guess. And we've also got our crest of resistance that we've drawn here. So we're expecting this area up here to provide resistance, a really strong lean here for us to get short with. So as price goes up into it, here's what we're looking at with our trade chart. As price goes up, you'll see we've drawn a crest of resistance here, we've drawn one here, and we can draw another one right about here. Now, these crests of resistance are quite important to the visual energy analysis trader. Why? Because as this yellow presses up through it, it provides some support. Okay, you'll notice that this crest of resistance here, this yellow, lower yellow, is unable to push up through it. You know, the dots are a little strong. They're above the midline, just getting up into the yellow. But our yellow is nowhere up through this crest of resistance like the yellow was here going up through this crest of resistance, because that's what makes our crests turn from resistance over here into support over here. So you'll notice here that the dots, these dots are staying below or at the midline, and then they go magenta. This is brick momentum, and our yellow is nowhere up into this crest. So the fight is over. The trader would go short on this red brick and manage their trade using the upper yellow, the upper energy band of the focus chart down to what we would anticipate to be a target, which is this lower energy band from the higher chart, which is shown right here. This is at about 2004, we'll say. If you have any questions or interests, send us an email at jb@drummondenergybands.com. And thank you for a great week. We certainly enjoyed the trading workshop this week with all of our clients, and the great questions that we've had.